So we have Jinesh and Simon. I'll let them introduce themselves, but you've got some really great people here to learn about finance apps and fintech and financial transactions.
Thanks, Matt, for the invite. Great to be here. So, quick background on myself. So, my name is Jinesh Vohra. I'm the co-founder and CEO at Sprive. My background is investment banking. So, I was at Goldman Sachs for about 14 years, in the intern, graduate. I went through the ranks, and then I left that world behind to start Sprive. The best way to describe Sprive is that we're a mortgage management app. There's about 11 million homeowners in the UK. Most of them spend most of their life borrowing hundreds of thousands of pounds over a 25 to 40 year period, and so we help them save money on their mortgage and try to help them knock years off their mortgage. And I'll go into more detail when we talk around how we do that. But nice to meet you all, and I'm here all day, so if you want to know more, feel free to grab me.
I'm Simon. I am currently the Chief Commercial Officer at TransferGo, which is a 12-year-old scale-up digital remittance platform. We've got 8 million users. We send money to more than 170 different markets, 90% of which are in real time, those payments. So it's a pretty impressive platform that we've built. My background is, as I was listening to Matt's introduction this morning, I realised I've been in Fintech for a quarter of a century, which is a scary thought. I was actually in Fintech before there was any tech, so it's just Fin, back in the year 2000. So great to be here. I've met some really impressive people. If I was half as clever as you guys are at this point, I don't know what would have been possible. So I think it's a really great event. Matt, thanks for inviting everybody in today.
Awesome. We're just doing quick intros.
Yeah, quick intro.
Okay, good morning everyone. Great to be here. Really good that we're having another Working Fintech Summit. Thank you, Matt, for the invite. My name is Agbesanwa. I currently work at Lloyds Banking Group as a sales director within the wealth management division. But my role is quite interesting in that we support fintechs and other banks to launch white label investment products or solutions. So I actually joined Lloyds a year ago from a fintech startup doing something similar, where I kind of was the first sales hire and built out that team. But I started my career in management consulting, so it's been very interesting moving into the fintech space. And happy to talk about that if any of you see me around today. But yeah, really passionate about fintech, wealth tech, and for me the driver really is around financial inclusion and thinking about how tech democratizes the landscape so that regardless of who you are, what background you are, you can access certain financial products and solutions that maybe 50 years ago you couldn't. So that's really what interests me.
So question for you all, and there's a minute answer on it, is what's your favourite innovation or feature you've seen in a financial app?
Who wants to go for that? You've got the microphone.
Okay. I was thinking about this on the train on the way in this morning. So many things that I absolutely love, but I think something that's not that new anymore that I thought was quite groundbreaking was the whole roundups feature. So if you spend, I don't know, £3.50 or in London £4.50 on a coffee, you can round that up and 50p of that could go into a savings product or an investment solution. And why I think that's really cool is because it automates something that a lot of people overthink. It's like, oh, if I want to start investing, I need £100 a month, or I need £1,000, or I need to create an investment account and go into this other app, or I need to go through all the steps and launch open a savings account. But the roundups feature really showed people that it's the kind of consistent but small investments or savings that count. And I think that was a big transformation in terms of people's ways of thinking and the kind of behavioural economics behind that as well. So big fan of roundups, whether it's to savings or investments. And in Europe now, they also have like ETF savings plans, which are like savings plans that go into ETFs, which are funds. And I think that, again, it's just automating it and making it easy for people and allowing them not to overthink what they're doing.
I'm actually going to selfishly plug Sprive because I've spent the last 5 years obsessed with building an app that's very unique in the market. In terms of mortgages, is a real big pain point for millions of homeowners across the UK. the fact that we built a market-leading solution where you can do everyday shopping at brands like Asda, Tesco, Sainsbury's, Morrison's, Amazon. Every time you shop, you're paying off your mortgage is very, very unique. And with interest rates rising from like 0.25% to like now 4.75%, there's a lot of customers looking for help in this space, and we support over £3.5 billion worth of mortgages. Our user base is on track to save £180 million in interest, knock about 22,000 years off their mortgage. And most people don't know we exist, and we're just about to close a £5 million round, which we're excited about, doing a £3.5 million TV national campaign. And so, yeah, we're really excited on our journey, and so we're definitely one to watch.
And I think Sprive as well after that. Not our app, so not TransferGo. I mean, it's amazing, but so for me, it probably shows my stage of life as well. It's that kind of investment management side. I use personally Trading 212 quite a bit. Moneybox is really interesting, getting people in. I love that save your change type idea as well is super interesting, and that automation. But thinking of that agentic future, I think I was speaking to some guys earlier, and it's that the next step. I think right now a lot of apps look the same, and actually it's a lot easier to name shitty experiences than it is to name really great ones that do something different to everybody else. There's a lot of apps that look very similar to each other, or just trying to throw in as many features as possible, and it becomes a real horrible experience for anyone using them. And you have to really kind of want to use it to bother. So that automation, and I think the next stage is really what I'm most excited about, what's coming soon.
So a question for Jinesh. Many personal finance apps have struggled to achieve profitability. What are the most effective monetization strategies for finance apps, and how can companies strike a balance between generating revenue and delivering genuine value to their users?
So I think this is a really important topic for anyone looking to create a personal finance app. I think, and you kind of alluded to this, is that there are a lot of apps that do very similar things in the personal finance space. So if you take a step back, you'll see quite a few money-saving budgeting apps out there that use open banking. You'll see a lot of variations of like credit card type companies, investment apps. Some have kind of round-up features. Some of them charge lower fees or no fees. You've got pension companies. You've got lots of neobanks, and so what you tend to find is that the personal finance kind of ecosystem is becoming quite saturated, and it's becoming difficult to come up with new ideas that can essentially grab market share. And the challenge you have in the UK, unfortunately, is that it's an expensive place to do business. Raising capital can be tough. The US is a lot more aggressive in placing bets than the UK, and consumer is expensive because marketing costs are just expensive. To acquire a customer in the UK is not cheap when it comes to financial services. And I, being a Fintech founder, I've met some amazing founders that have tried to build consumer personal finance apps, and they've either pivoted to more of a B2B model, or they've gone down. And I'm probably one of the few that's just kind of stayed headstrong and carried on down that journey. And as a Fintech founder, like cost per acquisition versus kind of the revenue that you can generate, and what's called your CAC, the cost to acquire, and your payback period, all these things are like really cool to making sure that you're ultimately building a sustainable business. Because as a business owner, you want to get to profitability, because that means that all the effort that you put in is essentially then create a sustainable business where you can make sure that all your hard effort is essentially worth it, and capital is just going to accelerate your progress rather than be the lifeblood of, if you don't raise capital, you die. And so the kind of revenue streams that kind of I've seen work. So lending is obviously very, very strong. Generally, if you get people more into debt, you will make money because interest rates are high, but also especially when you get into unsecured debt, you can charge a lot for that. And so those business models have always done well. You've got a lot of like investment apps, they make money on each transaction. So if you can build an app where every transaction you're making money, then that's very strong. I think the key is that when you think about something, is every active user, can you monetize that user? And when you monetize that user, how does it work in terms of versus the cost of acquiring that customer? If you're doing paid ads, you might find in financial services that actually it becomes very, very expensive. So can you acquire customers really cheaply through partnerships and ideally for free? And if you can find ways of doing that, then you're going to be much better in terms of you're going to need less money to be able to kind of operate the app and get to profitability. Unfortunately, in the UK, most people don't like paying for personal finance apps. They generally, if you think about it, you open a bank account, which is probably the biggest thing when it comes to personal finances, you don't pay for it. So when people have that mentality, it's really hard. And I've seen personal finance apps go for that premium model, or straight off the bat, you have to pay for something, and people don't pay for anything up front. They want to see it, they want to taste it, and so you need a free version of the app, generally speaking, otherwise your cost per acquisition is just going to be completely not viable. And generally when you do a premium model, I found from my experience 10% of people will be willing to pay, and so if that's enough to be able to cover the whole shebang, then great. Otherwise, the premium models aren't something you're going to rely on. And like you see a lot of apps out there that fail. Like 99.9% of apps stay dormant. And so how do you keep the app sticky is really, really key. And so these are all things you need to think about. My best practice and best advice is create a detailed financial model and really validate all your assumptions. And don't build an app until you're 100% sure that on paper it makes sense. And then if it makes sense on paper, then you can go and start thinking about something. But also the other thing is come up with something new. Like I've gone out in the market and created something that no one else has. There's no point trying to create a slight variation on something that exists. You just won't cut through, is my personal opinion.
Cool. We'll move to the next question, which is for Mary. With the growing demand for personal finance apps, how can companies stand out in a crowded market and continue to attract new users?
Yeah, sure. Definitely +1 on everything that's been said. Really interesting. So many nuggets in there. I feel like so many fintech founders learned all of that the hard way. Yes, there is a growing demand for fintech apps, and I always like to go back to the data and the fact that in the UK, I think it's only 15% of adults have the stocks and shares ISA, but I think literally 3% of UK adults have invested in crypto. So something about crypto and the way that it kind of entices people works in a way that kind of ISA, which is a tax efficient way to invest, didn't. And I think that's quite interesting when you think of it from that lens. What else would I say? I think around growing demand, just want to make sure I touch on all my points. So there's a piece of research from BCG, the consulting firm, and they talk about, I guess, how to retain customers, and they found that when it comes to investment apps, for every 100 downloads, so 100 people download your investment app, only 7 people will create an account, which is a shame. And then of those 7 people that create an account, only 2 people actually invest in some kind of products. And then of those 2 people that actually invest in something on your app, only 1 of them will repeat invest. So that's just talking to not only the customer acquisition, but actually the retention problem when it comes to personal finance apps is really tricky. It's like actually downloading the app is not the last step. There's so much more that you want to do to make that a profitable customer. In terms of how can you stand out with your apps, I think there's a couple of things that came to mind for me. A very easy one, what is your unique selling point? What is making your app different? We heard with Sprive, you can see it in the market as well. Even just on my way in on the tube, there's just like so many different apps. I'm just like, oh my God. I work in the industry and I'm like, this looks like everything else. Like, what are you telling people is different about what you do? So I think that's really key. And kind of this hyper-personalization I've seen when I've supported fintech apps in my role tends to work better. So if you're focusing on a specific community, is it women? Is it kind of the green fintech space? Defining that and being really clear about that can be better than trying to say you're for everyone. My next point was around, we've spoken a bit about customer acquisition and what your strategy will be to get more customers. So it could be social media, it could be digital marketing, but also I've seen fintechs do things like be really community focused, so hosting community-based events, having chat forums for people to share ideas and things like that. Just finding something that makes it a bit more sticky and then that makes people come back to your solution, not just come once and then kind of think, okay, I'm bored of this now, because that is the thing, people do get bored of the solution, or because of the stigma around personal finance, it's just asking your friends and family who feels comfortable like going into their banking app. You'll be surprised the kind of responses that people get. Some people completely avoid it. Some people check it every single day, just check the number and then leave. How do you actually keep people on your app and engaged is really interesting as well. And then my final point around standing out is around the user journey. So thinking specifically around investment apps, a lot of my fintech clients find that as soon as they ask for a client's national insurance number, like 40% of clients drop out because they're like, sorry, what? I do not give that to anyone apart from my employer. Like, what do you want to do with this? Are you going to steal my data? All these things. So I found that so interesting, right? Like, they need to know your national insurance number for you to open an investment wrapper, but people see that and think, okay, this is a scam, I don't know what's going on. So thinking about how you design that user journey when you ask specific questions, how slick is the journey, is really important as well. If you're asking all the uncomfortable questions like, what is your salary up front, people might back out. So thinking about that flow is really important as well. And I've seen some cool apps think about how do they maybe start off with educating customers first, so using gamification, some kind of edtech embedded videos and things like that, before even talking about investing.
Thank you, Mary. Question for Simon. How can financial apps ensure they are accessible and useful for a diverse range of users, including those with limited financial literacy or access to technology?
A commercial person has a really, one way to answer all kind of questions like this, right? It's just make it accessible to everyone. You'd think that making your app as accessible as possible was just common sense because it means you're going to get more users, they're going to use your service more, they're going to discover Sprive more, they're going to think, great, I want to use this all the time and habituate. And I think everybody that develops an app or financial services or whatever it might be, they start out knowing this, but then they just think, we've got all this cool stuff, I just want to chuck it in front of the user, and then it gets in the way of that accessibility very, very quickly. We've heard some interesting talks already from the product people this morning about, that connecting role between the technical teams and the business, and there's that ongoing kind of battle between the technical teams want to building beautiful experiences, and then the business saying just sell everything to everyone. When you're building an app, you obviously there are some legal requirements. There is the Accessibility Act and things in the UK. You need to make sure that that your apps are accessible to your users if they have disabilities. You've got to make sure that they are perceivable in more than one way. So text needs to have video, needs to have sound. You've got to use things like user-centered design, so techniques so that you're going to put the right features into your app that make it easy for people to access and use. There are lots of checklists that you can just Google, for accessibility guidelines. There's lots of stuff out there, but one of the easiest things to do is to go into the settings of your phone and look at the accessibility tab, and it's going to give you all of these different options for, hey, spoken, describing. You've got to think about people that might be, if they're partially sighted, etc., using screen readers. One of the common issues with if you put a lot of emojis and things and someone's using a screen reader, it's kind of saying crying face emoji when someone's listening to something being read out to them. So think about it from that perspective. And this is the classic, designing from not the perspective of you as the people that own the app and the service, because most founders and founding teams of these apps that I've worked with are completely obsessed with the value that they're bringing, which is, I think it feels like that's gone. Can everyone still hear me? Just tap. The battery's gone. We've talked for so long, the battery's gone. And they're completely obsessed with the value that they're bringing that then they stop thinking about how other people experience their apps or their business, right? So you've got to really try very hard. And that's maybe easier as you start, but it gets more and more difficult as time goes on to put yourself in the shoes of your users, and then creating those personas for people coming up from different angles. I think from a financial literacy angle, as providing access to people that don't have financial literacy, that can be an app of itself, right? That can be a whole service to help people learn more about finance, personal finance, why they should have a personal investment wrapper, etc. But in a broader sense, a financial app the main way that you can help people that are of limited financial literacy is to make it as clear and as understandable as possible, and have really efficient help text and obviously customer support for when people come up against an issue. Making those experiences as slick as possible and helping them understand why they should be using it and why it's helping them is the main thing. Lots of it, and as I said right at the beginning, there are many more examples of really poor experiences than there are of good ones, and that's a sad thing, but there you go.
So some very insightful answers there. We've got time for a couple of questions.
So I just had to ask a question. My question's for Jinesh. I related a lot to what you were talking about with other personal finance founders struggling to generate revenue or profit. I was wondering if you'd want to share a little bit about your journey with Sprive. How did you build your MVP? When did you know that it was something that you could potentially charge money for? And then from that point, how did you get your initial customers? And I assume from that point, scaling just became a lot easier.
Sure, and this might take a while, but I'll try to do this in the most concise way possible. So, when I didn't actually have the idea for Sprive initially I was kind of in probably where you may be today, where I wanted to create a business and I didn't know what the idea was, but I knew I wanted to do that. And so we were going through a process of just brainstorming ideas, and it took me 5 months to come up with the idea for Sprive. And that was born out of my own personal journey, having a mortgage and seeing the kind of the personal pain points. And as we kind of went through that journey, we kind of realized the problem and how we could kind of create a differentiated product. And we were then focused and spent probably about 6 months trying to validate the idea and see if we could build it, if there was demand for it, what would it take. Essentially create a financial model, a very detailed financial model to kind of see and answer all the questions, because I had a good corporate job and I would have to go to my wife and say, look, I have this crazy idea, I want to leave a very comfortable income to earn nothing. How does that sound? And she's an accountant and very risk averse, so not great. And so I validated that, and that was a kind of long process that is going to be, I can grab me afterwards, I'm happy to talk to people about how I did that. And then we got some investment based off a PowerPoint, which was fantastic, which allowed us to build like an MVP. First time we built the product wasn't great, second time we built it was great, and we launched on that, and we were able to raise more capital and go through the journey. But the financial model, that's your friend. The financial numbers don't lie. If you can't make it work on paper and your assumptions are credible, then don't build.
Am I allowed to follow up?
You got time for one more, yeah?
Oh, okay. I feel I'm not going to waste it. I'm going to pass on to somebody else.
So we've got any other questions? Yeah, go on.
What do you think is stopping people investing in the UK? Is it because of high housing prices, or low wage level, or high taxes, or generally risk-averse culture? When I speak to my friends, those who don't invest, said, I only have a little bit of money, there's no money for me to invest. What do you think?
I can have a go. What do I think it is? I think it's multiple things, but I actually still think it's like the financial literacy. I think that there are a couple of like ed tech focused personal finance apps like Your Juno, Female Invest that I have worked with that are doing really well, and they take out all of the execution and just focus on educating customers about personal finance holistically and like the confidence part, and they're doing really well. They can get like millions of customers. So for me, especially when you think about the gender investment gap, I think a lot of it is around confidence, and I think there's an amazing piece of research from BNY Mellon around marketing and investment, but like 75% of investment products are targeted at men. Like they're using languages like bullish and put a line on the picture of like, what does a line have to do with investing in a Tesla? Like seriously. Like we laugh, but it's genuinely a problem, because then women don't invest, and women tend to be making a lot of the household decisions around money and the generational transfer of wealth, all of those things. So I think a lot of it is still around confidence, it's around access to people thinking they don't have access to certain products, and that lack of knowledge. So any way that we can educate customers better and also embed investments into things that they're already using, like their banking app. So at Lloyds, we've done a big push to make sure all of our investment products you can open on the banking app. That sounds super simple and intuitive. It took hundreds of people and millions of pounds to make that work, because it's not that simple. But that really does make sense, right? You have your kind of savings and banking solutions. Why not also open a ready-made pension or a ready-made investment? And I think that could be a big game changer as well. You think about the kind of budgeting apps that can also open embedded investment solutions, or even, I think at Twitter at one point in the US wanted to launch an ability for you to invest in stocks and funds and stuff like that. Again, I think that's kind of crazy, but it does open the market up to different people that want to retweet and then invest in the same thing that they're reading about at the same time on the same app.
I'll go have to stop it there, sorry. Everyone's going to be around for more questions at lunchtime anyway, but thank you very much for putting us together.